What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 16th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I not only want to break down the recent price action for Bitcoin as it's rallied up from around $16,400 all the way to $21,000. Definitely an impressive move, but I mainly want to focus in on this. How do we build a mindset to approach these types of moves during a bear market, especially considering, as we always have to keep open, that maybe the bottom is in and maybe the trend is starting to formulate? I want to go ahead and try to give a non-biased answer to this question. And on top of that as well, share my general thoughts about why we still lean into the idea that we're probably not there yet, but we'll know what signs to look out for in the market. If you guys enjoyed this video, drop a like, consider subscribing if you haven't already. Liking and subscribing is one of the best ways you can support the channel. Let's go ahead and kick off the rambling. All right, so let's go ahead and just start off here with price action. I want to give you guys obviously what a lot of you are looking for, which is some kind of analysis here. We are already getting into the typical kind of relief rally range, or very close to it. We're at around 38%, whereas the past two relief rallies in price, or at least significant ones, have been around 43 to 46%, roughly speaking. So we need to understand that maybe a lot of the momentum here, if this is going to be a relief rally, is already in. But there's also the other chance here that this could be the beginning of a bull market. It could be the formation of an early move here with anticipation that the Fed has got a grip on inflation, that inflation is going to be cooling down quite aggressively, and on top of that, the Fed won't have to tighten so much. That's at least what the bulls are championing right now, because outside of the Mt. Gox news, where they're delaying the repayment schedule, which is going to reduce some of the available supply on the open market for Bitcoin, and the higher premium people are paying on the grayscale GBTC product, there's not many things that really could sustain a uptrend here, outside of the fact that, hey, you know, there's still a lot of money in the system, but it's mainly financial money, and that the Fed isn't going to be reducing that money through quantitative tightening. That's the narrative, I think, that is starting to be shared by a lot of bulls. Okay, now let's just go ahead and keep that in mind here. No matter what happens with the Fed, no matter what happens with inflation, we need to focus on something more important. And the reason I say this is why these values and these events are very important, and they will determine where price generally goes in the long run, in my opinion. I think it's very important to understand that price will tell us a lot more, and will be able to tell us in advance before those events really play out. Now, the market right now obviously has some right to be excited, considering that we are starting to see a couple consistent months of negative growth, right? We're basically seeing a decline or deflation in the core inflationary measures in the economy, especially in the United States, where it's very important to get inflation down, because if the US doesn't get it down, gotta be honest with you guys, the world isn't gonna get it down, because of how relevant the dollar is at play here. Okay, so once we understand that, right, we understand that fundamental discussion point, the big thing here we need to look for within asset prices is to see whether or not we are starting to turn previous bear market points of resistance into support. I know a lot of people think it's important to try to chase bottoms and get the absolute best price on Bitcoin, but for those of you who are big dollar cost average proponents, I think many of you will agree that it's not about picking the bottom. It's about making sure that you are in at a good point. Your general entry is going to be in at a point here where the trend is in your favor, where there is an outlook of an uptrend in the future. Now, dollar cost average investors take a bit of a different approach. They just slowly average in over time, not rushing in, which is totally fine as well. If you guys want to do that, we've talked about on the channel, even though we believe we're going lower, if you want to start dollar cost averaging, you're welcome to do so, right? But the key thing here is this, the 200-day moving averages, right? This is the first time since back in March of 2020, albeit at a much, much lower level, we are in this pocket, and we've started to slightly move above that range. Now, the question here is whether or not we can turn that 200-day into new support. That would be a very big change from the trend we've had over the past year in 2022. That would be a great start to the new year and would signal that the market is potentially very confident. There are some investors out there, much more bulls or buyers than bears, who are outflowing positions. And therefore, that could really drive up prices and kick off the initial stages of the next bull market, right? And this is coming from someone, again, who believes more in the bearish narrative here. All I'm saying here is that we got to see some of these indicators hold out for some time. I'm not FOMOing into this upward move. It's great to see, but I can understand from my understanding of trading over the last decade that I've traded in equities and crypto, the reality plays out, especially when the broader trends to the downside, that generally you got to be patient and you got to wait for the key signs to play out. There's a couple reasons for this that I want to emphasize. First off, I think there's one thing we got to talk about, which is a really interesting data science model from Colin Talks Crypto. He's another crypto YouTuber out there in the space. And he created a really interesting aggregate model of a lot of the data science models that we've talked about here on the DataDash channel. Now, what's really interesting about this indicator is that it's been quite consistent. I think it's one of the best aggregate indicators, to give him full credit where it's due, on how a lot of the models can line up through this scoring system on the CBBI, where it essentially will allow us to know when highs are getting close or when lows are coming in before we really know what those price levels are really going to be. When is Bitcoin overbought or when it's oversold? And a lot of people, I think, are taking a look at the typical indicators here that Colin has done a great job aggregating here that showcase when those lows come in, because they tend to come around in consistent periods for Bitcoin's history, sometimes a little bit higher, sometimes a bit lower, but we came down towards around 2 points on the index. Very similar to what we saw back during the previous lows of other crypto bear markets. Now, this has got a lot of people excited because for the past decade, we have traded within the framework that when we get to these consistent levels, we are generally formulating bottoms in price. And to be honest, operating off of that mantra over the last decade, it makes sense to a degree. But I got to tell you guys, the big difference here, and even Colin states this on his website, give him credit where it's due, on the CBBI, that using this in a macroeconomic recession or depressionary environment is, again, not factored into these models, and that some negative macro elements such as inflation, Federal Reserve monetary policy, wars abroad, you name it, these things didn't happen over the last decade. We were not in an era of quantitative tightening, but rather quantitative easing. And I really think, again, these models do hold a lot of relevancy. It's why we track a lot of the data science or various different types of analytical metrics that are out there for crypto. But again, as Colin pointed out here, I think we are in a very different environment, and to discount that and just continue to trade like the last decade and go off of a couple of data science models is not going to be the best move here. We have to be disciplined and understand that there is a monetary outflow in the money supply. Another thing as well that I think really kind of sets in this mindset again, no matter if you're bull or bear, is what Mark Minervini said. So he's one of the largest traders out there. He's one of the best traders by performance. He's won multiple trading competitions over the last decade. And I really like Mark. He's one of my top 3 trading, if you want to call them gurus, or whatever. I think gurus are an insulting term. I think in this case, Mark is a true trader. He's really great, and he's a very likable personality because he tries to always maintain a clear mental mindset when it comes to trading. And this quote here that he put out the other day, I really liked it. Instead of bull or bear markets, I like to characterize the market as a hard penny versus easy dollar market. My rule of thumb, reverse aggressive trading for easy dollar environments, or reserve it essentially. While the market has improved, I would still describe this market as fighting for pennies versus dollars coming easy. That's a beautiful way to put it here, because when you're a trader, you understand that you can take more risk, more aggression, and generally come out on top more profitable than not during the easy money periods. And that doesn't always have to be when the Fed's injecting a ton of money into the economy. It could be when valuations have gotten low enough where real institutional inflows are coming in. And I got to be honest with you guys, again, while it is great to see Bitcoin churning higher here, we cannot ignore the fact that the broader equity markets are still looking relatively weak. We are yet again just barely deviating for multiple days above the 200-day moving average like we did back here in December and November at still lower highs or lower significant highs than what we had in the past. The Nasdaq still has not passed where we were just back in mid-December, and we have not come up to test that 200-day, but are just barely grinding to a halt practically right above that 200-week, which could very well be yet again another deviation where we come slightly above the indicator. Retail traders think, oh my God, this is the next breakout, right? The everyday Joes are starting to buy and stuff. corporate outflows start to come into play. They start dumping on that buy side pressure and start shorting the market and drive prices lower. That is what's happened practically every single time. And it could be very well what's happening here with Bitcoin. A short-term fade up in price, offloading comes afterwards in bigger volumes. Again, I'm not here to just be a perma bear, guys, but this is not something, the big point I'm driving here is that every upward move cannot lead you to FOMO on price. If it does, you're going to end up revenge trading. You're going to end up using things like leverage, all the kind of things that maybe some other content creators out there will promote to you in order to benefit themselves, using the referral links, telling you have to trade every move. I'm not like that, guys. Again, whether you agree or disagree with me, we got people who completely 100% agree with me here on the channel. Some who couldn't believe that I'm further from the truth and stuff. And that's totally fine. I don't feel any insult or need to be absolutely right all the time. I'm not right all the time when it comes to markets. You guys know that very well if you've been watching me throughout 2022. We were a bit late to getting out of the bear market. Completely true and honest words due. Right? I'm not afraid of admitting to mistakes like that. The big thing that I'm afraid of is being too emotional with my trades and trying to chase every single bump up, because a lot of people are trading the same way they did off of the June to August rally, or back here like we did and many others when we had the bottom around 33K up to 48K. A lot of people thinking, this is it. This is the point we go to 100K, but then the goalpost gets lowered. Oh, this is when we're going to go back to the previous all-time highs and kick off the next bull market. And this is the next time. This is really when it's going to happen. The Fed is finally in control. Folks, the trend is still to the downside in the grand scheme of things. If I zoom out, we take a look at that monthly. While we've got a green candle here, which definitely looks good right now, we have not gotten ourselves out of the woods yet. Not as we're below the 200-week moving average, which has generally been the support range. I think what we've got for a chance here to play out over the next maybe month or so, perhaps we go up to 25K and we get a fake out. We get a rejection at that 200 week. And if that happens, if we get rejection at that point, that is going to spell terrible news for the broader crypto space and probably signal that, as we've known for a while, the Federal Reserve is continuing to reduce its balance sheet, and that it is not going to be stopping that reduction anytime soon. That the crypto space has lost a lot of its institutional investor sentiment, or positive sentiment, if you will, and it's felt negative with all of the restructuring, all the corruption that went on with FTX and with many other providers in the space, and that we need to be ready for a long, drawn-out winter, because we have not experienced that for crypto. We have not been below the 200-week for this long. Right? And I understand why some people might say, oh, it's time to go long. I got to tell you guys, study the bear markets of the dot-com bubble. Study the bear markets of 2008, of multiple bear markets back over the last century. You got a lot of great market data to work with once you zoom out. And you start to realize that we may not be out of the woods just yet, especially when we're coming down into the VIX pocket, which has been holding up even during bull market times, right? This elevated amount of volatility in the market. When we come into these pockets, there's a huge spike of volatility. At a minimum, coming here from around the kind of channel that we've got here all the way up towards around 28 to 32 points on the VIX, which is likely going to mean, if we see that play out, something similar, like we've seen time and time again, that equities will be back down to new lows. That crypto will likely as well see some pretty significant outflows. Until we see a real deviation between those markets, they have continued to maintain really strong correlation over the past year, 2 years. So we have to be cautious about getting too eager on every single move in the market. So if you guys enjoy that kind of thesis and thinking, if it seems to provide some kind of value for you guys and helps you to be more level-headed, I ask that you guys can drop a like. It's a great way to support the channel. And again, if you enjoy this kind of content. But the big thing I also want to emphasize as well, for those of you out there who are into the altcoin space and have seen some of the upward moves in Bitcoin and are thinking, hey, is it time to go long on altcoins? I got to be honest with you guys, again, even if this is the bottom of the bear market for Bitcoin, right? Again, the big thing that I'd want to emphasize is that we have not seen what is likely the lows in altcoins, because the low in altcoins, at least in terms of dominance, not in dollar terms, right? Because you want to be positioned in the plays that are going to perform best, right? if you are going to be DCAing or trading long on any crypto plays, I would recommend it being Bitcoin for now, and rather focusing on altcoins in the coming future as we get towards better valuation ranges when dominance for Bitcoin, Ethereum, USDT, and USDC are a bit higher. But now is the time to start doing the research on those plays, getting involved, and not only some free ways to be able to get exposure, whether it be airdrops or being able to participate within these projects and get some kind of rewards for it, but also as well looking for the projects that you're going to want to buy or get exposure to when the time comes, when the momentum is there, when discounted valuations are really starting to highlight themselves. And one of those plays that I'm really excited about is Crixivia. Now, you guys have probably heard me talk about Crixivia over the past 2 weeks. Crixivia is a project we've actually talked about nearly almost a year ago, back in early 2022. It's one of the projects on our radar, but one of the play to earn or play-fi games within the cryptocurrency space that is one of the leading MMORPG games that's actually developing, that's actually continuing to grow its community, and has launched its really long-awaited beta here. There was over 500 people playing the game during this period of time. It was really awesome to see the beta come alive for Crixivia, and really, again, a big hats off to the team for all the progress they've made in deploying this launch. I know it's never easy. There's, of course, some things along the way, some challenges, some bugs and fixes that'll come, but what's really great about it is that there was a lot of people simultaneously playing on the network. There was more boss fights, more features, a lot of long-awaited things the team's been waiting to release. So again, a big hats off to the team on that. If you guys are eager to see me play Crixivia in the coming days to the next week, we're planning to do a Twitch event likely this upcoming Friday. There will be some more details shared on the Twitter page. So if you haven't already, definitely follow them at Crixivia on Twitter. You'll be able to also hit the bell icon and make sure you guys catch some great updates on the game, as well as when they make the announcement for the Twitch stream. I'll also share it here as well. But until the next video, everyone, thank you all so much for watching. If you guys enjoyed the video, drop a like, consider subscribing, join the DataDash family. And until the next video, everyone, stay safe, trade smart, and I'll see you all in the next video. Take care, everyone.